Did this guy just figure out a way to make free money? Michael Saylor is the co-founder and chairman of MicroStrategy, one of the highest performing companies on the stock market in all of 2024. MicroStrategy has been picking up more and more Bitcoin over the years, and investors were using this as an indirect way to get exposure to Bitcoin through the stock market. This has made MicroStrategy's valuation surge from $10 billion at the start of the year to over $100 billion in November 2024. Michael Saylor has been boasting about the company's recent growth, and he's even made claims that they are making $500 million a day from their Bitcoin purchases over the years, outperforming many of the major tech companies like Apple, Microsoft, Facebook, and more. Investors seem to be believing what he is saying, as the MicroStrategy stock has seen extreme growth this year. So let's dissect exactly what's going on here, so we can figure out if they have actually found an infinite money glitch. MicroStrategy was founded in 1989, and their objective was to provide business intelligence software and cloud-based services. Up until 2020, they were a small-cap company that had not seen any substantial growth in the stock market, but this quickly changed when Michael Saylor saw an opportunity to become the first publicly traded company to purchase Bitcoin. Since the company had accumulated millions of dollars over the years, which was mostly sitting as cash on their balance sheet, he realized that this money was slowly losing value due to inflation, and this is when MicroStrategy made their first purchase of Bitcoin. At the time, there were no Bitcoin ETFs available on the market, allowing investors to gain exposure indirectly through MicroStrategy stock. Since this initial purchase from MicroStrategy was made in 2020, it's speculated that this is when Bitcoin was still worth around $10,000. MicroStrategy was trading between $10 to $20 per share before this Bitcoin purchase, but investors quickly reacted to this news, and it made the stock grow over $50 per share. Now, up until September 2024, MicroStrategy had 252,000 Bitcoin. This was valued at $9.91 billion, and it's speculated that their dollar cost average on these is around $45,000. As of November 2024, Bitcoin is trading over $95,000, so it's anticipated that they have made some significant gains. This all started since Michael Saylor saw this as a way to protect his company's cash reserve, but this ended up skyrocketing MicroStrategy's stock price. Over the last few weeks, on November 11th, they purchased about $2 billion of Bitcoin. November 18th, they purchased $4.5 billion, and again on November 25th, they made an even larger purchase for $5.4 billion. In November 2024 alone, they have purchased $12 billion worth of Bitcoin. This has made for some very exciting news for some investors, exploding the company's market cap up to almost $100 billion. However, all of this excitement came from the company owning Bitcoin, but MicroStrategy's Bitcoin holding is only valued at $37 billion. This means that some investors picking up MicroStrategy are purchasing Bitcoin for a premium, as MicroStrategy is almost worth 3 times as much as the amount of Bitcoin you are receiving. And this is why MicroStrategy has been a very controversial stock recently, as some investors would argue MicroStrategy is overvalued at 3 times the price of Bitcoin, while bulls will say this premium valuation is reasonable. Michael Saylor's claim that MicroStrategy is making over $500 million per day is a bit misleading. This comes from the fact that the company bought more Bitcoin in recent weeks. Since they have made these purchases, the price of Bitcoin has grown, and in turn making MicroStrategy money. But these gains should not be considered the same as operating gains. This strategy is simply trying to invest into Bitcoin to increase the price of the company long term, as they hope it will continue to appreciate. It's worked so far for MicroStrategy, but Michael Saylor has gone as far to say that they are powered by a Bitcoin reactor, stripping the volatility off of fixed income securities and transferring them to MicroStrategy stockholders. Some investors would consider this an over-exaggeration of their strategy, which can be a bit misleading since the company's operational gains itself is not what's generating the $500 million per day. So what's actually going on here? It all boils down to what is called the Bitcoin yield. It is understood that purchasing shares of MicroStrategy indirectly gives investors shares of Bitcoin. It's been made public that MicroStrategy has been collecting a large amount of Bitcoins over the last few years, and each time investors purchase shares of MicroStrategy, they are receiving a small fraction of this Bitcoin pot. Michael Saylor believes that over time, he can increase the number of Bitcoins represented by each share of MicroStrategy, because he believes that Bitcoin prices will potentially continue to increase into the future. When he talks about wealth transfer, some would describe it as new buyers of MicroStrategy purchasing shares at a large premium or higher price to old buyers of MicroStrategy who got in for much less. There's no free money here or an infinite money glitch. As co-founder, Michael Saylor is benefiting quite a bit as his shares continue to grow as the company stock appreciates overall. His net worth has even reached $10 billion, which makes him one of the richest people on the planet. We should also talk about how they got the money to execute these Bitcoin purchases to begin with. As we know before, MicroStrategy is a technology company which was expected to make approximately $50 to $100 $100 million per year. Now, how have they managed to make billions of dollars to purchase all of this Bitcoin? This primarily comes from a strategy they're using called convertible bonds. This is a form of a bond that can be converted into stock at the discretion of the purchaser. The concept is that at the end of the bond term, which could be a number of years, the buyer has the option of exchanging it for their initial purchase price or a certain number of these shares. So if the buyer is not satisfied with the value of the shares at the time of their bond's expiration, they can opt to take their initial principal value back out. So for investors that were able to get into MicroStrategy years before this price boom, it's expected that most of them are taking these bonds in for shares since it would be much more profitable. In turn, MicroStrategy used this to keep raising money and buy more Bitcoin. This sounds like an effective strategy in theory, but there's an underlying issue here, as shares could be diluted. These bonds are convertible, meaning that these investors can get the option to receive shares at their bond expiration. With the current share price, most of these early bondholders are anticipated to follow this option. But where are these shares going to come from? This would mean that MicroStrategy has to issue new shares to fulfill these bonds. So as they issue these new shares, the existing shareholder's stake or fraction of the company would decrease, since the total shares that the company offered to the public would increase. It's not uncommon for this diluted share scenario to exert downward pressure on share prices. But MicroStrategy is a unique situation. Their stock price has surged alongside the Bitcoin rally, which could have offset some of these impacts of shares being diluted. MicroStrategy is a unique company that deviated from their initial revenue streams and capitalized on this Bitcoin price surge. With earnings of $50 to $100 million per year, these metrics alone would be challenging to justify their current stock price valuation. These earnings have been overshadowed by their Bitcoin strategy, which puts a lot of pressure and eyes on the crypto markets. So what do you think about MicroStrategy's approach? Do you think that they have a sustainable model, using the price of Bitcoin to power their company's cash reserves? If you made it this far in the video, be sure to like, comment, and subscribe for more financial education related content.